As anticipated, not much has been accomplished at the EU summit so far. The Wednesday session will be one to watch, with results coming in Thursday morning. Earnings season is in full swing, with big tech names announcing this week. 3 weeks into the rally, can the U.S. markets make it into 4? I'm Taylor Schrantz, and the morning call starts right now.
The Chief Strategic Officer with T3Live.com, and welcome to today's morning call, my lonely morning call. I will do it solo today. At this point, the weekend has come and gone. We did not get a grand solution to all of the European problems, but I don't think anyone really thought that would be the case. They kind of did a little bit of juggling before the weekend anyway, putting the real date now for Wednesday, and I doubt we even get some kind of resolution then. There are just way too many structural problems, way too many different scenarios to deal with that I don't think anyone understands. So what I'm going to go over is what I understand, and that's the technicals of the stock market. That's watching action, not trusting politicians, not looking to Washington, looking to the grand plan, but looking at what the action of the stock market is telling me so I know how to maneuver it, and I can help explain to you how to get involved, be involved, and stay safe. So right now, if you take a quick chart of the S&P, take a look at what we've seen over the course of the past week. This was that Tuesday reversal day. Remember that, guys? The day to take notice. The reason why I called it the day to take notice, because it has significance. It was the day we broke through the bottom end of the range and came back, and the bears lost control. So now, if you come back to me right now, the reason why we outline these days to take notice is because you have to monitor the action to see if it really means something, because sometimes it doesn't. So if you go back here at the chart, I'll show you why it meant something. So first, you had that mini move right to resistance. Okay, this was that mini downtrend that was in place. You had a high, a lower high. Was this trend about to change? We had a pause. Remember that Jobs Friday, good number. They sold it off just because we were a bit overbought from this move. Well, that was one day. Then we powered through. This gave bulls conviction to get more stock, look at leading stocks, get involved with different areas, and it led to a move right back to the recent highs of that range. Now, everyone's been talking lately, is this just a range trade? Is this rally real? By the time they think that this rally is real, it's probably going to be over, and it could be another 4 to 6% from now, and that would be about a 20% move off the lows, and then they might start dipping their toes in. No. Hopefully you got involved earlier, because we've been talking about stocks and reasons and different strategies on how. So if you take a look right back at the chart, you'll see, again, even after a move from these lows, you still had commitment. You still had buyers come in. Every time it looked like it was going to break down, get ugly, we held in this 1190 area, wound up serving as new support. And if you look, we didn't even get down to the 50-day of 1177. Then on Friday, we powered above this 1225, 1228 area. Nice little close. They tried to bring it in midday. Bulls came in again to support the move. And now it seems as if 1260 is an easy target, and perhaps higher at some point this year. Earlier, about 2 weeks ago, I said there's a high probability we see about 1250 to 1300. We were only at 1150. We're well on our way. And that brings me to my sector spotlight to show you what sectors have been helping, what type of composure has changed, and where you could see some alpha. We've seen some alpha in retail. The retail group has been awesome. A lot of stocks at 52-week highs. If you look at the RTHs, which is the ETF for that sector, you will see the relative strength that I'm talking about. When the markets made new lows on that outside day down here, look how this held higher. That gave you a clue of relative strength. Wasn't brain surgery. All you had to do is say, look, wow, we're higher here versus the low. Go to some of these stocks. Then we broke above this downtrend, and now look where this retail group is. It's the one closest to the highs of the year. You've had stocks like Target on the move. You've had stocks like Walmart that hasn't moved in a decade, showing you some signs of life. Raw stores at new highs. Under Armour acting well. You've seen a bit of a rotation out of some of the high growth areas like a LULU. If you take a quick look here, this stock is not acting as well as it has done. But I think that as long as it holds above this mini area of 48, it looks okay. And then you do have a bit of a downtrend that if this starts to get above, it could break to the upside. That's around 52. I'll get into that later. But besides the RTHs, you've also had some strength in the semis. These are the guts of technology. Intel had a great report. They couldn't sell it for the first time, and then they got cute the day after, but they still held it in the game. Look at the chart of the SMHs, holding okay, trying to break above this recent downtrend. This was the move off the lows, held higher. They shook the tree right here, but look, On the lows, closed well off those lows. That's always a sign that the bulls are still buying. Above the moving averages, they're curling higher. This could see some more room. And if we take a quick look at Intel, Intel that had great numbers, okay, for the first time got some respect from them. This was the downtrend. This was the area, to buy again for momentum after it held higher. Guys, remember, markets went to the lows. This held higher. Intel showed relative strength, has a dividend. It was a stock to buy here and here. And now, with some more sideways work, it does seem as if it's going to go higher. This could be your new line in the sand on support. And then if we get a little bit more work up here, it can continue. And then lastly, the banks. Everyone says the banks have been a headwind. I've said it 1,000 times. For the first time, the composure changed a little bit. It happened, first, obviously, on that Tuesday. You had a move up into JP Morgan's earnings, remember? Then they came out. They were mixed. They were decent, though, and they sold. And everyone's like, oh, the bank move is over. And I said, wait for more clarity. Okay, if they hold higher, the XLF holds above 12, perhaps it could actually be some wind in the sales versus a headwind. And then we had Bank of America and Goldman come out. Said, I simplified it because I'm a cotton napkin technician. I look at levels. I want to watch the action. I said, if Goldman Sachs can get above 98.50 and then stay above there, the banks will rally. And that day was powerful. They still look pretty good. Take a quick look at the XLF. You will see this was the move off the lows right here. Okay, came up into this resistance. Wasn't really that strong enough to hold it right away. Pushed through. This was JP Morgan day. Came back. Then held this downtrend because a lot of times you do get a retest, guys, and then we're heading higher. Quick example of a stock to trade to give you some alpha with it was Goldman. If you look here, you had a few different moves, right? This was the move off that low, and then it wedged into this downtrend. First time through it on the earnings day. They couldn't sell bad news, so it was bought. 98.50, and then look, you retested it. On that day, we saw some weakness, and now we're wedging again. If this stock gets above 105, you're going to see a quick move to 110. Use this same pattern for other stocks as well. Wells Fargo. Actually, Citigroup is acting better than Wells Fargo, believe it or not. And, JP's decent. And then even look at, let's see what State Street looks like. Look at this move. This broke this lower area and started moving to the upside, coming into resistance. I say, at this point, maybe sell a little bit of this, but this also, nice chart. So you do have sectors. You have stocks. You have participation. You have a lot of different areas that we've been watching to measure the temperature of this move of the stock market. So if you come back to me, you will always be able to at least have a plan in place where you know what to look for. During this 3 weeks, I said, let's watch the retracement levels. If we hold the top 25% of each one of these ranges, there's commitment, there's strength, there's people buying the dip. That's what you watch. You don't watch the headlines. And obviously, don't trade out of your means the same way you don't want to live out of your means. You want to trade based on your time frame and what makes you comfortable. Right now, we're going to go to a commercial break, and then I'll show you some of the best acting stocks after earnings.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses. All right, let's take it in the trenches with some stocks that have some decent setups even after a good report, but at least the report is out of the way, so you don't have to worry about the risk of taking it into a report. First stock that we've talked about for a while over the course of the past few weeks has been SanDisk. Acting better, great report, gave you some follow through. If you take a quick look at the chart of SanDisk, you will see you can actually be rewarded as an investor. Okay, when we made new lows in the year, we looked for some alpha, some relative strength. Here you go, it held much higher. You had a low, 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 higher low. And this was my entry that we talked about with Alex around 44. This is where I said if you're a fund, not so bad to take this one. It's acting great. If you're an investor, it could be one of your go-tos. This is how it responded on earnings, closing the highs. To me, that's very bullish. The next area to watch will be this 50-60. I do think at some point this year, you're going to have 55 to 60 bucks. I would say trade it versus this earnings gap. The longer it holds above this 48 and shows commitment, the better your chances are we're going to get new highs here. Another stock that came out with earnings that I trade all the time is Google. And the question is, will this time be different? And the only way to really know that is watch the earnings gap and watch the actual pin action. Google last quarter gapped up, made new highs, and then failed. Question is, and why traders are a little concerned, will it happen again? So these are the levels to trade against. Look at Google. You see here, you had a nice earnings gap. Okay, this was that day, went to as high as 600, didn't close well. But look what it did here. It held this earnings gap. 577, 578 was the place to trade it against. You have a nice pro gap here. That means people had enough demand that they said, I'm going to pay up for it. And then they supported it. So as a trader, I'm going to look for momentum trade above 599, 600 for a move back to these highs. And if they can maintain this price action, you're going to see new highs on the year. And then perhaps for the first time, they trade Google out of this 2-year range. But what you don't want to see if you go back is you don't want to see this failure. You don't want to see it go, then come back to that earnings gap and then break in and then just turn into a disaster. So this time to see the market health, can it be different? And I think this time at least we can get a momentum trade 6 through 600 and then check it out at that area. Another stock that had great numbers that looks very similar to this in a fully different sector is ISRG. Big gap up after earnings. Stock's been holding above moving averages, looking good, has a great product in the Da Vinci, and it too could have a follow-on cash flow move as well as good for investors. Look at ISRG. You will see that it also has a very high level gap. This is from earnings. People paid up, shorts got squeezed, and then they defended the gap. So you could trade this long versus 408, and then the longer it stays here, the better the chances it breaks above this 420 to 425 for a move to new highs. This is a nice setup. As long as this gap stays open, it shows you power and commitment. As far as another stock that came up with earnings, I'm not going to really get into it. I just think you could hold it. Intel, it came out with good earnings. They gapped it up. They couldn't sell it down. I think it's going to need a bit more time here. If you look, this is the level that it should trade in for a while. And then once it starts getting above 2450, you are going to see a nice move higher in those semis. So now let's go into the quick hits on ways to make money, because there's one of them that I trade all the time that's been a little concerning, but still not raising a huge red flag, and that's Apple. Apple, I think more guys made money short Apple on Friday based on the relative weakness versus being long the market that was up 250 plus points in the Dow. If you look here on Apple, you will see at this point you have a bit of an island top, which for the long term is not good, because look how you saw the upside gaps over there. This was a downside gap, and when it opened below 400 or so, they never came in and said it's cheap, that we're going to take these prices below the gap. And now it's been just weakening all of its way down to the 50-day. So if I were you, I would watch this 388. Long-term Apple bulls, I don't think you're in trouble yet, but don't fall asleep behind the wheel, because if we start seeing some more technical damage, you could get a move down to this 200-day, which is 360. So right now, trade it versus this 390.75. Make sure it stays above the 50-day, and it's something we're going to watch. But also don't be trapped. A lot of people just started shorting all the indices on Friday because, oh, look how weak Apple is. But meanwhile, the market held up while a stock that everyone used to track for market direction didn't. So just keep that in mind, but use different pivots. BIDU and Sino also not showing the leadership that they've shown in the past few quarters. Not out of the game, but just something to recognize. If you look here at BIDU, you will see, in the last rally that we've had what? Another week of rallying, and in that week, you had a decent pull-in. Okay, it pulled in probably more than a third of what this move from the lows are. I'm not going to put in the retracement rules right now. So at this point, I think it tried to have a reversal. If I were you, I would trade long versus this 119.58. But if this were to break, I think it's in trouble, and you got to get out of the way. And then there's one stock that it's fully broken, but if you weren't long and it's not your problem, I see a downtrend that could press the shorts a little bit, and that's Netflix. But only if you're professional intraday should you really look at it. Netflix right now, if you see here, is building this sort of this low range wedge type pattern with this downtrend. It has a little bit of a floor right around this 110 area, 105. But if it were to start getting above, just say 120-ish, everyone who's still short, which I think you're a little bit of a piggy, considering it came from 300, then came from 200, then you even had another move when it broke below this area. I think you're going to get squeezed. I would cover if I were you. I'm actually going to look for a long if it starts to get above 120 for a move back to what could be the upper end of the range, if not 140, just for a trade. It's broken for an investor, but as a trade, it could be interesting. Also, lastly, LinkedIn acting a little bit better. If it could start getting above 90 to 91. I think they keep this in the game. Obviously, the guys over at Groupon want a nice valuation, and they still have to bring Facebook public. So the influencers at B must keep LinkedIn in the game in order to get those high valuations that they would want. So in closing, all I have to say is that we've had a nice 3-week move. You have to figure out how did you trade it? Did you fight it? Did you say, oh, I hate what's going on in Washington. I hate what's going on with the corporate greed. This Occupy Wall Street scares the bejesus out of me. I don't want to even look at the stock market. You know what? You did a disservice to yourself because there was a lot of opportunity. I'm not saying you could have caught the whole 15%, but there was a way to maneuver into stocks where you could have handled the range. Because a lot of guys are saying, oh, we're now just flat on the year, but we just had a 15% move off the lows. And this is the same mantra we've had for the past 13 years. We're, what, at 1240, we were probably in this spot well over 5-10 times 10 years ago. So if you want to get ahead, you have to learn how to actively manage your portfolio. You have to learn how to take cash flow out of trades, and you have to recognize your time horizon. You just can't sit there, call your broker, and think that he's going to get you rich. And you're not even going to get rich doing this, but at least you'll be in a better position to win and to take advantage of the stock market and make money from the stock market instead of buying at the top, selling at the bottom, and saying, I will never look again. There's a lot of opportunity. It's up to you. Take accountability. All we need is a little hustle here in America, and maybe we'll become a better spot. Scott Redler, T3 Live, The Morning Call. See you at the recap. Have a great day trading.